Welcome to the Technical Writing Success Video Overview by Kurt Robbins, where we help you get smarter than your competition. Okay, so the AI boom is here, right? It's promising this huge revolution in, well, everything. But while big tech is dropping billions to build this new world, you gotta wonder, who's actually paying for all of it? Turns out, the answer is probably a lot closer to home than you think. All right, so let's dive into the massive spending spree we're seeing from big tech. To really get what's going on, you have to understand the sheer scale of this investment. I mean, we're not talking about them just dipping a toe in the water here. They are building a whole new ocean of AI. So, get this. In just one single quarter, we're talking 3 months, Meta, Microsoft, and Google spent a staggering $78 billion on AI capital expenditures. And let me be clear, that's not their yearly budget. That's just one quarter's worth of spending, all focused on building out their AI infrastructure. It's just a mind-boggling amount of cash. So you have to ask, right, where does all that money come from? An investment that huge, it has to be paid for somehow. And if you're thinking it's just coming out of their massive corporate profits, well, you might want to think again. Because the answer, more and more, is, well, it's you. It's us. Tech companies are getting really clever about passing these massive costs on to consumers, and they're doing it by baking them right into the software subscriptions that pretty much all of us use every single day. Let's look at Microsoft as a perfect example. You know, they used to have their AI tool, Copilot Pro, as this optional thing you could add on if you wanted it. But now, they've completely changed their strategy. They've bundled it into a brand new premium subscription tier. So the AI isn't a choice anymore. It's a mandatory and, yeah, more expensive part of the whole package. It's a really smart move on their part to make AI feel like something you just have to have. And Google, they're basically following the exact same playbook. They've shoved their Gemini AI assistant right into their workspace plans for businesses, and, surprise, surprise, they've jacked up the price by as much as 33% per user. But here's the real kicker. For most of these plans, you can't even say no. There's no opt-out. That AI fee is mandatory, whether you actually use the features or not. The story doesn't stop there either. Look at Adobe. They just rebranded their main Creative Cloud suite to Creative Cloud Pro, and, you guessed it, hiked the price by $10 a month. And what was the justification? You got it, expanded generative AI features. So we're seeing a very clear trend here. The AI shows up, and your monthly bill goes up right along with it. So this gets into the really fascinating part, the psychology of it all. Why are we, for the most part, just accepting these new costs? Well, it turns out it's not just about the cool new tech itself. It's about how it's being sold to us. Okay, so marketers are tapping into something called perceived value bias. It's a neat trick. Just by slapping the label AI-powered on a product, our brains automatically think, oh, that must be smarter, more advanced, more valuable. And suddenly, that higher price tag feels kind of justified, right? It just creates this powerful feeling that you're paying for progress. And that works hand in hand with something called subscription inertia. And you know exactly what I'm talking about. It is so easy to subscribe to something with just one click, but trying to downgrade or cancel, suddenly you're lost in this maze of menus and confusing options. And like Professor Anya Sen from Carnegie Mellon points out, companies are totally banking on this. They're exploiting the fact that it's just easier to stay subscribed than it is to leave. Okay, but this whole high-stakes spending gamble isn't just about us, the consumers. Oh no, Wall Street is watching every single move. And let me tell you, investors are definitely not treating all of these companies the same way. See, investors need to see a return on all that money being spent. It's that simple. They cheered for Google because Google could point to real, tangible growth in its cloud revenue and say, look, people are adopting our Gemini AI. But Meta, the market absolutely punished them. Their stock dropped over 10% because investors looked at their massive AI spending and just couldn't see a clear path to actually making money from it. And then you've got Microsoft, kind of caught in the middle of all this. Investors see the insane amounts of money they're spending on AI, but they aren't seeing that cloud revenue growth speed up to match it, you know? They're spending more and more, but the growth rate isn't accelerating. It's basically a big prove-it-to-us moment for Microsoft right now. So what does this all mean for the future? Well, this constant, intense pressure to make money off of AI is really starting to change the software we use every single day. There's this quiet, but definitely growing pushback from consumers starting to happen. People are looking at their credit card statements and noticing all these little charges adding up. And they're starting to ask themselves, am I paying for something truly innovative here, or am I just paying for hype? Especially when it's for AI features they don't even use.
And all that frustration is really fueling interest in new ideas. The CEO of Zora, Tianzuo, points out that they're seeing an explosion of interest in usage-based pricing, pay-as-you-go models. The idea is super simple and way more transparent. You only pay for the AI you actually use. It puts you back in control of the cost.
Ultimately, this all points to a really fundamental shift in how we interact with technology. It feels like we're moving away from a world where we used to own our software to one where we're just perpetually renting it. And that leaves us with a pretty big question to think about. Is this really the future we want for our digital tools? Thanks for watching this technical writing success video overview, where we help you get smarter than your competition. Make sure to subscribe to the Technical Writing Success YouTube channel. And if you found this valuable, please like, comment, and share to help us reach a wider audience.